All right, let's talk about the mortgage market because, wow, this past week has been a wild ride. We saw this massive, sudden rush of activity that looked like it could be a huge turning point, only to have it all just vanish. So, what on earth just happened? Let's get into it. Okay, it all kicks off with this number right here, plus 11%. In just 1 week, something in the housing world shot up by 11%. So, what do you think it was? Home prices? New listings? Well, the answer actually tells this fascinating story about timing, psychology, and, well, opportunity. Yep, that's it. Mortgage applications. We're talking about everyone. People looking to buy a new place and homeowners wanting to refinance. And an 11% jump in a single week? That is a huge deal. It was the biggest surge we'd seen all month. So the real question is, what lit the fuse? Well, it really all boils down to one simple thing: the cost of money. For just a brief, shining moment, mortgage rates dropped, and that created what you could call a golden opportunity for a whole lot of people.
So, what was this magic signal that had buyers and homeowners who'd been waiting on the sidelines suddenly decide to jump into the game?
This. This right here. For the first time since all the way back in 2022, the average rate on a 30-year fixed mortgage finally dipped below 6%. Now, 6% isn't just a number. It's this massive psychological line in the sand. After seeing rates well above that for so long, dropping below it felt like things were finally getting more affordable. And for thousands of people, that was the green light they were waiting for. Okay, so we've got this flood of applications coming in, but who exactly was making the move? Was it mostly new buyers finally seeing their chance, or was it existing homeowners? Let's break down the numbers. So, as you can see here, pretty much everybody was energized. Applications for new home purchases went up by a really healthy 8.9%. But just look at the refinancing numbers, a massive 14.3% spike in 1 week. Clearly, existing homeowners saw those sub 6% rates and did not hesitate to lock in a lower monthly payment. And if you want to see just how dramatic that refi boom was, look at this. Compared to the very same week last year, refinance applications were up an unbelievable 109%. I mean, that's more than double. It just goes to show you how much pent-up demand there was from people just waiting for rates to give them a little bit of a break. This wasn't just some 1 week fluke either. According to Joel Kahn over at the Mortgage Bankers Association, this was actually the peak of a 4-week trend and the strongest we've seen since 2022. He also pointed out that the average loan size on these refis was going up, which kind of suggests that borrowers with those bigger, more expensive mortgages were the ones who were most eager to snag a better deal. But here is where our story takes a very sharp turn. Because just as quickly as that window of opportunity flew open, it got slammed shut by events happening on the other side of the planet. This timeline really lays it all out pretty clearly. So early in the week, you've got those amazing sub 6% rates, right? But then, over the weekend, a U.S. strike in Iran sends this shockwave of uncertainty through the global economy. Now, this part's key. When there's that kind of instability, big investors get nervous and they run for safety, which often means buying U.S. Treasury bonds. And that sudden rush can ripple through the market, causing lenders to raise mortgage rates to account for all the new risk. And that's exactly what we saw happen. And this was the result. The 30-year fixed rate shot right back up over that 6% line, landing around 6.13%. Just like that, the party was over. That little glimmer of optimism was suddenly replaced by a whole new wave of economic anxiety. So what does this actually mean for the next few weeks? Well, historically, nothing scares off potential home buyers faster than that double whammy of rising rates and global instability. It's pretty likely that the surge we just saw is going to be followed by a cool down, as many would-be buyers decide to just wait on the sidelines and see how this all shakes out. So, after that absolute roller coaster of a week, what's the big picture here? What are we supposed to take away from this whole whirlwind of events? Well, in a nutshell, we saw just how incredibly sensitive the housing market is to interest rates. A tiny dip below that key psychological level unleashed this massive wave of demand. But we also got a pretty stark reminder of how fragile those good conditions can be. A single geopolitical event was all it took to completely slam the brakes on and reverse the trend. It shows you the housing market really doesn't exist in a bubble. And that leaves us with the big, unanswered question. Was that 1 week just a brief, lucky moment for a few people who acted fast, Or is this wild swing a preview of what's coming next? A new normal of volatility where these windows of opportunity might open and close faster than ever. It's definitely something everyone with an eye on the market is going to be watching very, very closely.